Good morning, it's Joe Neighbour from Signal Centre, providing the latest roundup on FX markets from a chart perspective today. It's set to be quite a big day for markets today. A lot of economic data out. We have at 12:45 the ECB press conference where they're expected to keep rates on hold, but likely to address inflation, so expecting some commentary around that. Following the decision at 12:45 is when we have the press conference at 1:30. Also at 1:30 we have US GDP for the third quarter, as well as the weekly initial jobless claims. So plenty to keep us interested today on the markets. Going to start off the analysis this morning with the dollar index chart. Things looking pretty robust on the dollar front at the moment. Obviously, if dollar is moving higher, that indicates that there is a bit of appetite for safer haven currencies, and that's what we're seeing at the moment. I've got quite a nice bullish channel formed on the daily chart, as is highlighted by these yellow bands. And while price remains above this 93.43 level on the dollar index, I am expecting higher prices. So we can see during this week and at the end of last week, some support has been found just in front of this 93.43 level, and we are beginning to push higher. So we're on the front foot today, up by around about 0.1% so far on the dollar index. So for me, I'm looking for higher prices towards this next resistance zone between 94.47 and 94.74. So dollar index likely to be very much involved in any volatility that we see today as a result of this ECB press conference, and then obviously the GDP number at 1:30 from the US. So taking into account obviously the euro influence and the US influence, euro dollar is likely to be quite an important currency today and grab attention from investors and traders alike. So in terms of our view on euro dollar, the view hasn't really changed in that we have got this large head and shoulders top pattern that's taken shape over many months. We saw a breakdown below resistance at 116.64 in recent weeks, and that has capped upside advances. So that has acted as a really nice level of resistance and continues to attract selling interest. So while that remains in place, the scope from our perspective is to look for more downside. So we believe more downside will be seen. We're also trading in a bearish channel, as you can see here. And the measured move of the head and shoulders top pattern comes in at 110.60-ish or 110.55. So we believe lower prices will be seen. Looking at the price action over the last few days or so, there is no clear indication of a reversal in that. And while that dollar index chart remains in that bullish channel, we are going to expect lower prices here on euro US dollar. However, yes, US dollar typically is a bit of a safe haven currency, but we are seeing continued appetite for some of the riskier currencies, like the commodity currencies such as Aussie dollar and New Zealand dollar. So quite interestingly, looking at the Aussie dollar chart today, what that seems to have done is formed a bit of a double bottom pattern here. So we have one bottom on the 20th of August, one on the 30th of September. We've broken up above the neckline, which came in at 74.77, and pretty much invalidated this kind of more sinister looking top pattern that formed well, back here between sort of December last year to its completion in June. So a bit of a two-way potential on this, whether or not this is just a rally to the neckline of head and shoulders and maybe a bit of an overshoot on the upside before the longer term trend persists, and whether or not this will be a selling opportunity, or have we completed a double bottom and can we start looking for higher prices? So we've seen a really big and sharp move to the upside on Aussie. We did see quite an aggressive reversal candle posted on the 21st of October. But ultimately, we remain above this, what was previous resistance, now turned support at 74.77. So it looks as though there is still underlying appetite for these riskier currencies like Aussie. So you know, it is a little bit confusing in the FX space at the moment, but the key underlying theme that hasn't changed and has been very much front and center of our analysis for a number of months now is that dollar strength is expected to persist going forward, and that therefore means we are expecting lower prices, particularly in euro US dollar. So from an intraday perspective, please be aware of this sort of mad 45 minutes that we could get a little bit later on today. 12:45 we've got the ECB rate decision. 1:30 we've got the press conference, and also we have US GDP at the same time. So be careful if you're trading today. Lots of volatility expected, but ultimately in terms of direction we're expecting higher prices from the US dollar. So anything linked to US dollar, bear in mind we've got a bullish undertone related to those. And yeah, that's it for this week. We'll be back next week with some more roundups for you all. Until then, trade safe. Goodbye.